Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the derivative data of Nifty, Bank Nifty, as well as the different asset classes. First of all, a general disclaimer. This video is only for education purpose. Please consult your financial advisor before investing in trading. Now, first of all, let us have a brief about what we have discussed in our last video. In our last video, we have mentioned that market might take some pause. We might see some sort of profit booking coming in at the higher levels because Nifty and other indices has broken some sort of rising channel, and we might see some sort of cool off or profit booking at the higher levels. And we were expecting, rather, we didn't mention to go short. We had a view that one should wait for some corrections, wait for price to get stable, and then try to go long at the lower levels, because last week was a truncated week. So we had a slightly cautious view on the markets. Market exactly performed on our expected lines. We had a view of or we have recommended traders to just follow a strategy of first half an hour to 45 minutes range breakout, and that panned out to be very helpful in the last week. Now, after so many of hustles in the last week, on Friday, Nifty managed to close on a positive note on Friday. But overall, on week basis, it just closed around just flat to positive or slightly flat manner. So definitely, some sort of support was seen on Friday uh, at the opening tick, and from the opening tick, market started scaling higher, making higher tops, higher bottoms throughout the day, and ended on a positive note. So, friends, now let us go to the Nifty daily charts. We'll try to study the charts and we'll try to figure out what could be the trend for the next week. Now, this is the Nifty daily charts. You can clearly see uh, that Nifty has been moving in this particular falling channel. On Friday, it has just managed to test those levels. Still, it has taken an attempt to break that particular channel, but it is just closed at the channel's resistance trend line. Now, this particular candle on Friday is could be termed as a piercing line, which indicates that Thursday's candle was a red candle, huge red candle. Market on Friday, it opened on a negative note. It made a low, intraday low, and started scaling higher. It almost pierced 70% of the Thursday's trading range and ended on a positive note. So this is particularly a very good candle, very good pattern of piercing line. It could be a trend reversal pattern, or this could be the bottom of the markets for the time being. And if this is the bottom, then we might see Nifty challenging again its lifetime high, which is 22,775 in the coming trading sessions, or maybe next couple of trading weeks. So definitely looking at this particular setup, we feel that the setup has turned. I mean to say the trend has turned. Any dips should be used as a buying opportunity from these levels. This is the daily charts. Now let me just try to analyze the weekly charts. Now, on the weekly charts, you can clearly see it has formed a hammer. It is a red colored candle or a red hammer. So to be precise, the highs of this particular pattern, which is 22,220, 22,427, or we will take it a round figure around 22,430. Once that is taken out, then we might see a sharp recovery in the markets in the coming weeks. So definitely, weekly charts is also indicating strength, and daily charts is showing more strength than weekly charts. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 22,930. Second support is around 21,777. Third support is around 21,630. On the upside, the first resistance is around 22,260 or 59. Second resistance is around 22,326. and third resistance is around 22,427. So these are the crucial supports and resistance level in Nifty for the next week. Again, I would like to say, just try to follow this or watch out these levels. Use first half an hour to 45 minutes range breakout. If it breaks highs, mark the highs and lows of the first half an hour to 45 minutes, whatever is comfortable to a trader. Then trade accordingly in the direction of the breakout. If it breaks the highs, go long. If it breaks the low, go short, at least for intraday, and just try to book profits for intraday basis, those who are going short, because this particular pattern, the piercing line, is showing a trend reversal. So one should not go a positional short for intraday. If somebody is going short for maybe to gain 50, 60 points, 70 points gain, that is okay, but one should not go a positional short at this juncture. Now friends, let us discuss the derivative data of Nifty calls. In Nifty calls, you can see the action was seen in 22,200 calls, then 22,300 calls, 22,400 and 22,500 calls. Now here you can see the option premium are flat. Implied volatility is in comfortable zone. It is between 10.28 and 10.44. There is rise in the open interest and rise in the volumes. On immediate basis, 22,200 could act as an immediate resistance. Looking at the volume concentration, if it closes about 22,200, then definitely there are chances that Nifty might scale up to the levels of 22,500 in the next week. But looking at this particular pattern, we feel that some sort of intraday cool off cannot be ruled out, and that should be used as a buying opportunity. So looking at this particular call data, the data seems to be positive at this juncture. Yes, there is no writing seen in this Nifty calls. Now friends, let us discuss the Nifty put data. In Nifty put, you can clearly see the action was seen in 22,100 puts, 22,000 puts, 21,900 puts and 21,800 puts. Now here you can see there was a drop in the option premium. That means smart money is already into writing out of money puts or at the money puts. That means the data is strong and which will propel the market on the upside, or it will push the market on the upside. So the data is positive. Now on immediate basis, 22,100 could act as an immediate support. If Nifty closes below those levels, then there are chances that Nifty might drift down to the levels of 22,000 mark, or between 22,000 and 21,900 is the strong support area. If there is a cool off, that could be the area where one should go long. But definitely, this data is purely based upon the volume and open interest at particular strike prices. But looking at the psychological mark, 22,000 could act as an immediate strong support. So that could be the area when one should go, or one should start building long position for a swing trade on the upside. So overall, the data of charts and derivative data seems to be positive for the markets. A piercing line in the on the candlestick pattern on the Nifty daily charts is indicating some sort of trend reversal. This could be the bottom or intermediate bottom of the markets. So one should not stay bearish at this juncture. What I would like to say and what I believe at this levels. Now, friends, let us discuss the daily charts of the Bank Nifty. Now, let us go to the Bank Nifty daily charts. Now, on the Bank Nifty daily charts, similar kind of pattern has been formed, which is a piercing line. You can clearly see. But most important thing which I would like to say is a breakout of this particular falling channel. Now, a piercing candle, again, breakout of this falling channel, again taking a strong support at its 100-day moving average. This black line you can clearly see. So three things matching at this juncture, which is clearly showing that Bank Nifty has also or also it is at the bottom. Looking at this particular pattern, yes, RSI is still slightly negative, but again, until and unless, because I am the follower of price, or I am the believer of the price. So if the prices rise, the indicator is also follow after the prices. So definitely As I said, I religiously follow the prices behavior. So any dips should be used as a buying opportunity in Bank Nifty also. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 47,186. Below that, the second support in the Bank Nifty is around 46,579. And third support in the Bank Nifty is placed around 46,300. On the upside, the first resistance is around 47,830. Above that, the second resistance is around 48,255. And the third resistance is around 48,564. So these are the important supports and resistance level in Bank Nifty. Traders should just watch out this level. Wait for some cool off. If there is a gap up opening, wait for some cool off. Then try to build long positions at the lower levels. So as I said, looking at this particular charts, any dips should be used as a buying opportunity. Now friends, let us discuss the derivative data of Bank Nifty. In Bank Nifty, you can clearly see there has been a significant rise in the option premium. That means a smart money is not into writing, or they are buying or they have bought the bought the calls. So now, looking at this particular data, we feel that there has been a rise in the open interest, rise in the volumes, but the implied volatility is also rising. It is slightly into danger zone, which clearly indicates that we might see some sort of cool off or some sort of profit booking if there is a gap up opening on Monday. So one needs to be highly cautious while going long at this opening or a gap up opening. One should wait for some cool off and then try to build long positions or try to create long positions at the lower levels. Now on immediate basis, 48,000 could act as an immediate resistance. If the Bank Nifty closes above those levels, then there are chances that Bank Nifty might scale up to the levels of 48,800 in the coming trading sessions, maybe in 10 to 12 trading sessions. So definitely the data is positive at this juncture, but only concern for me is the implied volatility. The high the implied volatility, the chances are that we might see some pressure in the option premium or the option or the Bank Nifty puts option premium. So if there is a pressure in the premiums, then that might bring in some profit booking at these levels. So one needs to wait for the price to get some cool off, wait for some price to retrace in the technical terms, and then if prices get stable, we will see in the option premiums in the put where the prices are chances or where are the chances that price might get stability at the lower levels. So friends, now let us discuss the derivative data of Bank Nifty puts. In Bank Nifty puts, you can clearly see there has been a drop in the option premium. That is clearly indicated that the smart money is already into writing the puts. That means that markets is positive or market might have bottomed out. Here the implied volatility, again you can clearly see it is at the maybe at the highest point in the recent times. You can clearly see it is between 19.21 and 23.06. There has been a rise in the open interest and the drop in the premium, which indicates the trend is bullish. But here the most important thing is the implied volatility. So again, we might see smart money booking profits in Bank Nifty puts. Now, booking profits in Bank Nifty puts means those who are short, aggressively shorts in Bank Nifty puts might start booking profits, and that might bring correction in the Bank Nifty. So that should be used as a buying opportunity. Now here on the immediate basis, 47,500 could act as an immediate support. If Bank Nifty drift below these levels, then there are chances that Bank Nifty might slip down to the levels of 47,000 mark, which is the psychological area. You can see there is a very strong concentration of volume and open interest. So we might see Bank Nifty testing 47,000 mark, and between 47,000 to 46,900 or 46,850, that should be the area where traders, those who wants to trade long, should start building long position for swing trade. So definitely we might see some cool off or intraday basis, or maybe in the next week, maybe on Monday or Tuesday. That the time will tell. We will also, or I will also monitor that closely, and again I will just update it on my Twitter account. So those who are following me will see the update in Bank Nifty in the next week. So overall, looking at the data of charts in Nifty and Bank Nifty and derivative data, both the indices, we feel that this could be a trend reversal. Market might have bottom out. It will take some time. It might gate or gain some strength, and this is the area where the bulls, or this could be the breeding grounds for the bulls. If there is some cool off, one should definitely go long at the lower levels. So friends, now let us come to the final segment of our show, which is positional call. I have identified one stock from the textile and real estate, combine of both. The name of the stock is Raymonds. Let me go to the daily charts of the Raymond Limited. Now, friends, you can clearly see the stock has given a consolidation breakout. You can call it as a W pattern. You can call it as a double bottom. You can call it as a congestion breakout of the last since September 2023. The stock has didn't given any kind of returns since those level, and on Friday the stock has given a strong breakout supported with strong volumes. The stock has the RSI is also positive at this juncture, you can clearly see, uh, and it has broken this particular resistance trend line. So the stock has potential to give decent return, at least minimum 10% from these levels. So the stock is quoting around 2011 mark, or 2012 to be precise. So at this juncture, the stock is looking quite strong at these levels. So investors, swing traders, positional traders, long-term investors can accumulate the stock on dips to maybe around 2160 mark. Sorry, beg your pardon, 1960. So one could accumulate, or one should accumulate the stock on dips to 1960 for an upside target of 2240 in short to medium term. Short to medium term means in the next 3 to 4 months. So definitely the stock can give a decent return from this juncture. Uh, so definitely I would suggest traders to wait for some cool off and take this opportunity to buy at the lower levels. So friends, now let us conclude the show. I'm sorry for I have taken long time. This video has become slightly longer because there was a lot of explanation. So sorry for that. But definitely next week could be highly volatile. So one needs to stay cautious while going short. Any dips should be used as a buying opportunity. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.